and don't expect miracles. Together, we're going to figure out in this course if investing in the stock market is something you'd like to do. You'll find that the things you'll learn about it are fascinating as well as useful. We'll explore the fundamental trade-off between risk and expected returns. There's always an element of risk with stocks. We have good reasons to expect to make some decent money by investing in stocks, but it's no sure thing. There's no free lunch in the investing world, but we'll learn the closest thing to it. That's diversification. We'll learn that saving and investing is like planting a tree or dieting or exercising. The best day to start was 15 years ago. The second best day, though, is today. That's partly because saving and investing is a habit, and the longer you nurture a habit, the easier it is to maintain it. That's not the main reason, though. The main reason you want to start investing as soon as you can is that time is one of the three big factors that determine how much you have at the end of your investment horizon. The other two are how much you invest and the rate of return on your investments. Many people spend a lot of time trying to increase their rate of return. The truth is, that's really hard to do without taking lots of risks. It's much easier and simpler to focus on the other two factors that affect how much money you end up with, the amount that you invest, and the length of time you're invested. For example, if you want to double your money, then you can do it in just a bit over 10 years at 7%. If you wait 8 years before investing, so that you need to double it in the remaining 2 years, then you'll need to earn over 40% annually. That's next to impossible without taking so much risk that you won't be able to sleep at night. Besides, you miss the point of investing if you focus on returns. You can't spend returns. You spend dollars. If you earn a big, fat 50% return for a year on a $100 investment, then you've made all of $50. Don't quit your day job because of that. The more you invest, the better. The sooner you invest, the better. You control those. You don't really control the rate of return with any accuracy. We won't kid ourselves in this course. Instead of trying to get rich quickly, we're going to become comfortably well off rather slowly and without having to stay up all night worrying about losing everything. We're not just going to learn some smart things we can do. We're also going to learn how to avoid making stupid mistakes. Unfortunately, we won't learn how to avoid losing money on an investment. Sometimes we'll buy what turns out to be a real turkey. That happens to everybody once in a while. Good investments can turn bad sometimes. Scottish poet Robert Burns wrote, "The best laid schemes of mice and men gang oft to gley." Yes, the best laid plans can go awry. Good investments can and do sometimes turn bad. What we want is to avoid something that most reasonably informed people would have said was a bad idea before you did it. We've all eaten a tasty morsel that turned out to upset our stomach. It happens. We just don't want to eat 4 bags of potato chips, no matter how tempting they might be. We know better than that. If you decide to invest in stocks, then you'll have lots of company. In the last couple of decades, between half and 2/3 of U.S. adults have owned shares as part of their personal portfolio at any given time. The percentage is even higher for people making over $75,000 a year. Almost 3/4 of U.S. college graduates have direct investments in stock, and people between the ages of 50 and 64 are the most likely to say they have directly invested money in stocks. During this course, I'll be assuming that if you're thinking of buying stocks, you've already taken the first step in your lifetime financial plan. That is, you already have the rest of your financial world in reasonable order. You may not be rich, but your student loans and car payments and mortgage are manageable. You know the difference between overdrawing your checking account and being out of checks. You splurge a little now and then, but you almost never max out your credit card, and you certainly aren't carrying a credit card balance. Or maybe not. That won't change anything for this course. The concepts we'll learn apply even if your financial house is a mess right now. It's just that you need to clean up those other things before investing in stocks. For example, most people who carry credit card debt month after month pay 12% or more. In the 37 years from 1975 to 2012, the popular Dow Jones Industrial Average beat that just 18 times, less than half. Why take the risk of doing worse if you can get yourself out from under that 12% guaranteed? Pay off your credit card debt and then start investing in stocks. Stocks are, after all, just one type of investment. Sometimes during this course, you may find yourself thinking that it's okay to make decisions about stock purchases in isolation. It isn't. Instead, keep your investing behavior in perspective. For example, investment decisions might depend on your age, your health, your marital status, whether you own a home, and so forth. I'll also assume that you're not ready to be the investing equivalent of a bodybuilder yet. If you're like most people, then you probably get a little exercise, but you really should do a little better. Most likely, your investment knowledge and financial wherewithal aren't horrible either, but you really should do a little better. At the end of this course, you may decide that you're not ready to buy stocks any more than you're ready to run a marathon. That's okay. You'll know why you're not ready, and you'll be more comfortable knowing what you need to do before you do decide to invest. You'll have gotten it out of your system, and you won't feel as if you're missing anything when you hear your friends tell you how well they did with their investments. Stock markets aren't for everyone. Maybe, though, instead of getting investing out of your system, you'll decide that investing is in your blood. If so, then this course will give you the knowledge to get started. If you're already an investor, then you'll be more knowledgeable about how the stock market works. In our next lesson, we'll learn about stocks and other fundamental securities by exploring a new way of looking at the corporations that issue them. We'll discover that shares of stock are a way of keeping track of who owns the company and who keeps the money the company earns, if it manages to earn any. Whether you've traded stocks before or not, I think you'll come away with a clearer picture of what stock is and the important purposes it serves.